investment expert to walk us through that how he is coping up with this sell-off, and we spoke to him yesterday also. Abhay, we are in that stage of the market and that stage of, I guess, mind frame where intellectually we can take bad news that virus has not got contained, health issues are still there, but emotionally, I guess it's getting like a drain. Emotionally, investors cannot take any bad news, businessmen are suffering. Where do you see the balance would be discovered? Ultimately, market is a reflection of emotion and valuations.
True, Nikunj, but I believe that emotions are short-term and value is long-term. So, you clearly have to identify what are you, a trader or an investor. That is very, because emotions play a much stronger part as far as the trader goes. But I guess a good investor should keep, it's difficult, but try and keep emotions aside and just look at value. I know it's difficult to segregate, but that would be, one should at least strive towards that. Maybe some rationality will come in decision making.
Abhay, typically for someone who, let's say, is an investor in, I can hear you, Abhay. So my question to you, Abhay, is how do you reckon one should shift allocations in this kind of a market? For, let's say, somebody who's got 5 or 6 mutual fund schemes, one equity diversified, one balance advantage, one small cap. Do you think it's time to churn not the allocation towards equities, but within that get out of small cap stocks, small cap funds, sectoral funds, and only stick to Nifty or large cap funds?
If you had asked me this 15 days back, Nikunj, before this carnage, I would have tried to give you a more logical answer. But right now the valuations are so bad that across the sectors, whether it is small cap, whether it is mid cap, whether it is sectoral, that it doesn't make sense to try and second guess the market. So I would say that, it is best till the time this, for an investor I'm talking about, that till the time this volatility settles down, and I'm sure it's a matter of time before it kind of stabilizes at a level, stay put with what you have. If you have, if you have 100 rupees and let's say beginning of Feb you had your portfolio was 100 rupees and your asset allocation was 50-50. Now that there is, let's say, 25% fall in the equity market, so effectively you have 75 rupees. So you have now you have to get back to allocation of 50-50 on 75 or 80. And so you need to get back to, 40 in equity, 40 in debt. So if you have liquidity, you need to add to that extent on your equity portfolio by 15% to come back to a 50-50. That is the only way I would say that one should handle this market right now. Go back, your asset allocation would have deeply changed in the last 1 month. Though the net worth would have also come down, but I would suggest one should get back to his original, whether it's 70-30, 50-50, whatever he has chosen as his asset allocation. He should get back to that. That means adding more money to your equity portfolio, obviously, to get back, because debt would not have taken a hit.
Okay. Abhay, pour in your experience and tell us that what are the first signs which you would watch out for, or where you would call out that a market bottom is nearing or a market turning point is nearing. What factors would you look at? What technical or fundamental factors will convince you that we are now in the darkest dusk before the dawn and the light at the end of the tunnel is not far away?
Nikunj, if I had a perfect answer for that, trust me, I would be sitting in Bahamas right now and not talking to you. But, keeping that apart, jokes apart, I think typically, like you see in an overbought market.
You're sitting in Lonavala.
When you sorry? No, right now I'm at my farm, not in Bahamas.
No, I've been told that you're sitting in Lonavala, you're not in Mumbai.
Yeah, I'm at my farm, which is in Pali. But if I knew what I was saying was, if I knew the exact answer the timing-wise, it would not have been Bali, it would have been Bahamas or somewhere. But no, on a serious note, I think what needs to be done is that the signs which you typically see on the overbought market or, which is overvalued market, that every second person that you meet wants to buy something and is asking what to buy. So I am seeing the opposite of that, and which are signs that everyone, like you are asking, and everyone is asking that, what should I sell? Should I get more into cash? Is this going to? So when there is a widespread fear, which is difficult to define in exact terms, it's more a feeling, but I get that feeling right now. And you have, people who have been holding on to equities for years saying, no, I need to get out, I need to protect my capital. Classically, that is a sign of that this looks like a good time. Although I must say that it is difficult to time it. So if you are getting into allocating more resources to, I think this is the right time to do it, according to me. But like you said, there is also a sentiment which plays a part, no matter how much we try and keep that apart. But I would say that money which you need not, which will not make you panic. So don't leverage and buy for sure in this market. But if you have surplus cash, this is a good time to rebalance your allocation, which means you will have to, by definition, put more money into equity. So to answer your question, to me, you should start now.
Okay. Now, Abhay, a general question which perhaps you have been asked again and again, and I'm sure you've been asked right now also, that beginning of Feb, let's say at 100 rupees, 100 has become 65, 70 or 75. How much time before I recover? Will it take 2 years for my depreciated capital to become normal, or we are in for a long winter? One should mentally prepare that, look, this is extraordinary sell-off, and nobody should expect any magical recovery next 6 to 12 months.
No, I would go with the view that a part of the recovery, now it's difficult to say how much, but quite a substantial part of this recovery is going to be V-shaped, because it is not. It's unlike this is not an economic fallout, or as we had in 2008, which took some time, or previous. This is more like I keep qualifying it, unless you're looking at a disaster happening. And my answer to that is, if disaster means this will be something bigger than a world war. If that is to happen, I would not even think about what the assets are. So I'm leaving that scenario aside. But if it was to take another month or 2 months to recover, the recovery would be to almost 50% of the fall would be pretty V-shaped. But the question is that, is it going to be, I would suggest don't try and time the market and say that, okay, I will see the market is going to, stabilize for 3 days, then it is going to rise 2%, 3%. Now I know that is the time. You cannot, you could not sell in the falling market. You will not be able to buy in that psychologically. It is easy to say that these are, catch it when it is moving up. But most people that I know of are not, including me at times, not able to do it when the movement is sharp either way.
Yeah, fair. Makes sense. I guess the wisest is to just stay put and, like Abhay is saying, maybe even increase your allocation into equities. But Abhay, good to have you on the show as always. Thanks for joining in.